Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a look at the action in today's session, where it was a little bit of a yo-yo day, but we did end firmly lower.
Yeah, I think the Nasdaq was down 2.9% intraday, almost went back to break even, ends with a loss of about 1.3%. So market volatility alive and well. We have three stocks to look at today. Pfizer, PFE, which was in the news. Another healthcare name, Harmony Biosciences. A lot of these biotechs acting very well. And finally, let's revisit Northrop Grumman on a strong day overall for defense stocks.
Okay, we'll do that. Well, first, let's take a look at the major indexes, starting with the NASDAQ Composite, down 1.3% today, the hardest hit. We also had the Dow down about 0.8%, the S&P 500 down 0.9%, and same for the Russell 2000 down about 0.9%. So it did look like the NASDAQ was trying to find support, right around the levels that it saw in June 21st, 22nd or so, but we did slip back down by the end of the day, Ken.
Yeah, this is just a super difficult market. It could have been worse. Like I said at the top of the show, NASDAQ down 2.9% intraday. So we'll see where it closes. Could be a close right in the middle half of its range, thereabouts. But just a rough day. Looks like we're going to get lower volume on the NASDAQ. So that's at least a silver lining. And it looks like higher volume on the NYSE. So we could end up getting a distribution day for the S&P 500, but not for the NASDAQ. So we're still under a lot of pressure here, very challenging conditions, and we'll see what tomorrow brings.
All right. Well, thank you for that, Ken. Let's also take a look at the S&P 500 here. After that big outside bar, downside reversal a couple of sessions ago, continuing to slide lower. So that's the other thing to point out. We're below a lot of key levels here. That 21-day line, the highs just from a couple of sessions ago, the 4,000 level, the 50-day line. So there's a lot of hurdles on the upside that we still need to clear.
Lots of hurdles, lots of selling in Bitcoin today. I mean, that is certainly not helping the market. We talked about the importance of that 20,000 level. That gave way, and I think Bitcoin actually went below 19,000 today, down about 6%. Big sell-off in oil, big sell-off in natural gas, down double-digit percentage decline, and gasoline also very weak. So just widespread selling everywhere today.
Mm-hmm. All right. Well, next on our list, let's take a quick look at the 10-year Treasury yield. That was another key development today, continuing to come in. And this time, the first close below the 50-day line for 0TNX here in this move since early March. So that does seem somewhat significant. Not to say that it could totally bounce here and recover. But again, this is the first close below this longer-term moving average in this rate hike environment that we've been in the last couple of months.
No, I mean, the bond market is clearly worried about the threat of a recession, and I think everybody knows that the economy is headed for a slowdown, and what's making it difficult is that the stock market and pundits, no one really knows how sharp the slowdown is. It going to be? Is it going to be 2 quarters of declining GDP? Is it going to be worse than that? But the fact that this 10-year yield now is having some problems holding on to that 3% level. Tells me, at least for now, that the bond market thinks the Fed may not have to be as aggressive with rate hikes going forward. So we'll see how that plays out. But clearly, money flowing into bonds is just the market's way of saying that there are problems with the economy, and it's just a matter of how bad the slowdown is going to be.
Exactly. And then it's a tricky balance, right? Because if the Fed is less aggressive, you would think that would benefit the stock market. But if we're headed towards a recession in either scenario, that's definitely dampening on things. Ken, what is your outlook on when we might see some more positive signals on the macro front?
Well, it's really tough because listen, I mean, Micron just reported earnings, and apparently the numbers were not good, and the guidance was even worse. I haven't checked to see what that stock is doing in aftermarket trading, but
Well, why don't
you
we
know,
check now?
yeah, sure.
Let's see. Down
So
about 4.5% or so.
okay, down about 4.5% after falling from 96 down to below 60. So apparently the guidance wasn't very good here, and this is going to be yet another challenge for the market. And with the end of the second quarter being today, earnings season isn't going to pick up next week, but the following week we're going to get a bunch of financial reports, and then middle part of July, end of July, we're just going to get a whole bunch of earnings reports, and I'd like to stay optimistic that we're going to see some really good results and really good outlooks, but I'm not sure that's going to happen, and that could be another problem for the
Yeah.
market. So we'll keep
Yeah.
our fingers crossed. But there's just
Mhm.
so many areas of uncertainty in the market right now. It's not surprising to see the indexes and individual stocks acting the way they are. Sellers are in control, and it's almost a sure thing that we're going to see an earnings slow down as well. And the market is just grappling with that right now too.
Exactly. All right. Well, let's take a look at Pfizer because it's in one area that is holding up relatively well amid the widespread weakness and uncertainty that we are seeing. Up 3% today, looks like slightly above average volume. And Ken, to see a stock that's still 15% off of its highs from late last year have an RS line blue dot, meaning outperformance versus the S&P 500, that's pretty telling to me.
Yeah, absolutely. And IBD Live this week, we've just been talking about the outperformance of healthcare stocks, the drug makers, the biotech stocks, the managed care firms. It's pretty widespread leadership here. So Pfizer starting to get its act together, could try to make a move higher here. But news today, well, first of all, they have their COVID pill Paxlovid, which is they filed a new drug application with the FDA today, so good chance that that's going to get approved. And then the Biden administration is getting ready for possible COVID outbreak again in the fall, so they're ordering their vaccines, and they placed a big order with Pfizer. I think it was 150 million doses for 3.2 billion, with an option to purchase an additional 195 million. So you can see why Pfizer is up here. That's going to be a nice little windfall for the company and its partner BioNTech. So yeah, Pfizer looking good here. Nice day of outperformance. Broke out over some recent highs today, with a little bit of volume. Average volume, but higher than in recent sessions, and nice little breakout over a trend line here today.
Yeah. So with all of those moving averages converging, Ken, do you see this as a stock to nibble on in the medical sector here? Or with the number of stocks that we're seeing with setups in this area, do you go with something that has been a little stronger in 2022 versus moving sideways?
Well, listen, we talk a lot about position sizing, and if you're going to buy any stocks in a market like this, you have to start small. So if a normal position size is 10%, maybe a stock is 10% of your portfolio, your initial buy will be about 2.5%. So it's really just a little small nibble. I think Pfizer technically is looking strong here. It's in a good sector, and as the government spends a lot of money for additional COVID vaccines, Pfizer could be positioned to outperform again. So, saying all that, yeah, it looks pretty good. I personally have been staying out of the market's way, like a lot of other people, because it's just such a difficult market to expect stocks to make meaningful headway. So, Pfizer looks good. I'm holding off for now, but solid day for the stock today.
And elsewhere in the medical sector, let's check in on Harmony Biosciences, pulling back in an orderly fashion to a buy zone after breaking out of a cup with handle not all too long ago, Ken.
Yeah, and this is just a good visual example. I wanted to talk about Harmony. This is very highly profitable biotech stock. You can see the earnings and sales at the bottom of the chart here. Really, really strong. Grower. They make drugs for various neurological disorders, and so you had this nice breakout from what we would call a cup with handle base. You see several up weeks in a row. We go back to the daily chart, and what happens here is that the stock now is just drifting lower. Now, for a good portion of today's session, this stock was barely moving from yesterday, so it was mostly unchanged. It kind of got dragged down late by the broad market, but this is just another classic example of what a handle forming looks like. So it had multiple up days in a row. Now it's drifting lower. You can see the volume has really quieted down. So we look at this as maybe the last shakeout, maybe for a new round of buying. But we know it's a challenged market, and patterns like this sometimes have a tough time making headway when you're in a market that's under some distribution. So good one for the watch list. If we somehow start to get buyers come into this market and we see renewed signs of strength in the major stock indexes, I think Harmony Biosciences could be one of the new leaders in the biotech space.
Gosh, a couple more days before that handle, if it continues to trade how it's been trading, for that to show up officially in pattern recognition. So we'll keep an eye out for that. But this is an area that we're definitely very focused on. A lot of stocks in this area showing a lot of short-term relative strength, and Harmony, with it being a new issue, let's see, looks like the highs from 2020, high 52, 53, kind of bumped its head up against that level this spring. So it seems like, if it can tighten up here and then get past all of that congestion and then have the wind at our backs with better market conditions, something like this that has such strong fundamentals that it does, seems promising.
It's got really good fund ownership too. You can see the number of funds owning the stock has increased dramatically in recent quarters. From 180 all the way up to close to 370 funds at the end of the first quarter. So we'll be getting second quarter fund ownership data fairly soon. But this is just a good looking stock, and like the big annual earnings estimate for 2023, and just a lot of positive qualities here.
Definitely. Okay, and last but not least, we want to talk about Northrop Grumman, ticker NOC. Gonna go over to the daily chart here because it gained almost 4% today. So it's been hovering right around that 50-day line after dipping below that level. Got a nice boost today in above average volume, and I believe this was our stock of the day today too.
Yeah, it was, and this was volume really picked up. But you saw names like Raytheon and Lockheed Martin, pretty broad-based strength in the group today. Looked like a buy signal today from Northrop Grumman when it broke out over Tuesday's high. Not really a handle. It's still consolidating here, but with that heavy volume move and close near highs, I'm sure some people might have nibbled at it earlier in the session. We have it on leaderboard. It's a relatively small position right now, but we were encouraged to see the strength. I didn't see any news that was dominating the defense group, but like I said, broad-based strength among a lot of institutional quality names in the defense group.
All right. Well, thank you, Ken, for that detailed analysis, and thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, where we will be joined by, let's see, drum roll here, Dan Fitzpatrick of StockMarketMentor.com. I was just getting straight in my head. We just lined up all the guests for July, so all of their names were running through my mind. But it's Dan Fitzpatrick returning to the show. We'll have to see how he's been making trades here. He was in Twitter when it was coming off of its bottom before all the Elon Musk hoorah rah. So we'll have to get an update from him on that. I know he likes buying stocks that have the 50-day line and the 200-day line that are close together. So maybe some turnaround opportunities that he's looking at. But we'll have to see what's on his radar. And you
He's
can, yeah, go ahead.
he's super savvy, very respected, and always a great guest on IBD Live.
Oh, yeah.
So I would urge everyone to tune in, and we'll get Dan's take on things.
Oh, yes. Thank you, Ken. And you can find all the information on that, investors.com/IBD Live. We'll see you then, and we'll see you right back here tomorrow after the close.